So this is a video for you guys to understand the weighted indexes of different currencies properly. Now, the first step is to kind of write down the 8 major currencies that we have, where they go like this. You have the US dollar, you have the New Zealand dollar, Australian dollar, Canadian dollar, British pound, Japanese yen, euro, and Swiss franc. These are the 8 major currencies that we trade, that we look at all the time. Now, these 8 major currencies, if you want to take one currency, let's say US dollar, and you want to put that next to the remaining other currencies, so 1, 2, 3, 4, 5, 6, 7, 8, yeah, the remaining other currencies, that gives you a total of 7 US dollar pairs, right? Where you would have US dollar New Zealand dollar, US dollar Australian dollar, so it would be NZD USD, AUD USD, US dollar Canadian dollar, USD CAD, US dollar pound, GBP USD, US dollar Japanese yen, USD JPY, US dollar euro, which is Euro USD, and US dollar Swiss franc, which is USD CHF. So these give us 7 kind of pairs when you take one currency and put it aside the other. Now think about it this way. What if I take all of the US dollar pairs, so all 7 pairs, and I put them next to each other, all of those, load up all of the charts, put all of the charts in one screen, add all of the charts together, and go ahead and take an average of that. So you know how you take a normal average of different numbers in school. You have 2 plus 2 plus 3, I don't know, something like that. Then you have 3 numbers, you divide it by 3, right? So you have 7 pairs, and you go ahead and divide it by 7. That's how you find an average of that given currency, right? So let's put that into action. So let's say for US dollar, for example, in this specific case, if you want to find the index of US dollar, you write everything in the form of USD XXX. It doesn't matter that you have GBP USD, you write that as USD GBP. So you write everything in the form of USD XXX plus USD XXX, which is another currency, plus USD XXX, so on and so forth, right? So this is what I mean. You take US dollar and you put it against the first currency, New Zealand dollar. The order doesn't really matter in this case. Plus US dollar, then the second currency, AUD. US dollar, the third currency, CAD. US dollar, the fourth currency, pound. US dollar, Japanese yen, plus US dollar, euro, plus US dollar, CHF. You have added up 7 currencies to each other. Then you go ahead to make it mathematically correct. You put an over 7 at the end of it. You're going to have to make sure that you put brackets on either side as well. Now, if I go ahead and copy that, and I literally come on Trading View, where you normally search for a pair, Euro USD or whatever, just go ahead and paste that formula and click enter. It loads out a chart for you that looks like this. Now, there's one simple problem with that chart, and this chart actually looks identical to a USD JPY chart. It's literally the same chart. Okay, now how do we get rid of that problem? The currencies that you have written down over here, look at all of them. US dollar NZD, US dollar AUD, US dollar CAD, US dollar GBP, US dollar JPY. When you get to that JPY factor, so USD JPY, just put an over 100 straight after the JPY. So what does the formula now look like? You still have US dollar XXX, where XXX would be all of the different pairs, US dollar New Zealand, US dollar Australian, US dollar Canadian dollar, US dollar pound, US dollar Japanese yen, US dollar euro, and US dollar CHF. However, just after the US dollar Japanese yen, you put an over 100, where in this case, what you're doing is you're taking a little bit of that JPY factor out of it. Now, if I go ahead, copy that formula, and paste it, it loads out a new chart. That doesn't really look like the USD JPY chart anymore. So have a look at this chart. If I go ahead and load out USD JPY, it doesn't really look the same, does it? So that is the weighted index of a currency. Now, let's go back to step 1. You remember that I said we have 8 major currencies, right? GBP, JPY, Euro, and CHF. We have 8 major currencies, okay? So we're going to keep this in mind. We're going to have these, save these currencies to one side. So now you already know what to write for the US dollar weighted index. Simply, we would do like this. Now imagine if you want to do it for New Zealand dollar. You can imagine it would be literally identical. Open bracket, New Zealand dollar, and you write everything in the form of New Zealand dollar XXX. Okay, so New Zealand dollar US dollar plus New Zealand dollar Australian dollar plus New Zealand dollar Canadian dollar. Again, the order doesn't really matter. Plus New Zealand dollar pound plus New Zealand dollar JPY. Remember about the JPY factor? You put an over 100 after it. Plus New Zealand dollar euro. Plus New Zealand dollar CHF, close bracket, over 7. Again, if I go ahead, copy that, and I paste it in a new chart, it'll load out a whole new chart for me. Okay, let me go ahead and actually show you this then. It'll load out a whole new chart for me. Okay, now looking at these indexes again, I'm gonna go through it once more. Let me write down all of the 8 major currencies again. US dollar, New Zealand dollar, Australian dollar, Canadian dollar, pound, and JPY, euro, and CHF. Now you know how to write for the US dollar. Now you know how to write it for the New Zealand dollar. How about the Australian dollar one? Again, I have it right over here, so I'm just going to copy and paste it and show it to you. Australian dollar, it will look like this. So remember I said the order doesn't matter. So Australian dollar in form of AUD XXX, where XXX would be the remaining 7 pairs. So AUD JPY, remember what I said about the JPY factor? You put over 100. So AUD JPY over 100 plus AUD CAD, AUD CHF, AUD USD, AUD Euro, AUD NZD, AUD GBP, close bracket, over 7. Now this kind of applies to all of these 8 major currency pairs. Remember, when you get to the Japanese yen, when you look at the JPY index, it wouldn't be over 100 anywhere. So JPY index is literally the only one that you don't need to put over 100 anywhere for the JPY index. Let me copy and paste it and bring it over and show it to you properly. So that's the JPY index right over there, where I have JPY XXX, again, where XXX is all these different currencies. So JPY AUD, JPY CAD, JPY CHF, JPY USD, JPY Euro, JPY NZD, JPY GBP, brackets around it, over 7. So the JPY is the only one that you don't need to put over 100 anywhere. Okay? Now the same thing applies to all of these different pairs as well. Let me give you an idea of different pairs. So for Australian dollar, it would look like that on the top over there. Then Canadian dollar looks like that on the top over there. Swiss franc, euro, pound, Japanese yen, New Zealand dollar, and US dollar. Now, if you need, go ahead and rewind the video, pause it so you can write down exactly how I've written all these weighted indexes, but it's just a matter of typing this in TradingView and pressing enter. And just remember to kind of save the pair as well, so you don't have to type it kind of every single time that you want to look at these weighted indexes. So these are what we call the weighted indexes of a certain currency, right? It's a weighted average of that given currency. Meaning for this, in this specific example that we have the US dollar weighted average, if this market is to go down, US dollar is losing strength across the board. Let's say, for example, for pound, if this market is going to go down, then pound is going to be losing strength across the board. If it is to go up, pound is going to be gaining strength across the board. So for example, if this is looking to go up, then you're looking to buy pound. So you would look to buy, for example, GBP NZD, or buy GBP JPY, GBP USD. But you would look to sell Euro GBP. If this is going up, you would want to sell Euro GBP. Okay? It's going to remember how it works when it comes to these different pairs and crosses. Now, when it comes to analyzing these sort of indexes, there's a few important things that you need to remember. You cannot get too kind of lost in these pairs and for analysis of these pairs, okay? Not pairs, sorry, the weighted averages. Just do a few simple trend lines here and there, mark out your zones, look for candlestick formations, look for your price action, and kind of see what the market is telling you. See what zones it's kind of tapped off in the past. Again, so you look for simple zones, simple trend lines, and continuation from there. You don't want to go too much into depth analyzing this. Also, if you're not paying for TradingView, you can only look at these pairs on the daily, weekly, and monthly. You can't look at it on any lower time frame unless you're paying for TradingView. So don't get too lost on the weighted indexes. If you're looking at it, if you can't analyze it, it's looking bad to you. You know, you're not sure what's happening. Get rid of it. You don't need to use it, but it could potentially help you with your analysis. Right? Just make sure that it's not stopping you from executing a certain trade, or it's not slowing your analysis. Okay, because let's say if I believe, for example, in this case, AUD over a longer time is going to gain strength, but I might be looking at Australian dollar against the US dollar, and I might think the Australian dollar against the US dollar is actually tapped off a very important line in the market and is actually looking to come down. So that's going against my analysis for AUD weighted index, or for example, pound weighted index. You would look at it, and what it might be telling you is the market is ready to go down, but then you would look at a specific pound pair, let's say something like pound New Zealand, and your technical analysis on that might be telling you, oh, okay, the market's likely to drop a little bit more, then we're going to get a bullish move. Go ahead and trust that technical analysis over your weighted index. Okay, so don't get too lost into it, don't analyze it too much, just it's there as a point of reference. It's there for you to kind of learn that these weighted indexes exist. You should only be looking at these weighted indexes after you start to look at DXY and analyze DXY. So only look at these weighted indexes if you've been trading for some time, especially when it comes to the academy, when you finish all the academy and you're watching IML TV on a regular basis, and you are a consistent trader. You don't want to get lost in the game when it comes to these sort of indexes. But as of now, it's just a matter of kind of knowing exactly how to write them down, how they work, why we would use them, and how it's calculated. And little by little, obviously, you can start to implement them in your own pure technical analysis. Any questions, any problems you might have for the weighted averages, feel free to drop me a message on Instagram, and I would be more than happy to answer any questions.